Hello everyone, welcome back to our financial roundup. Today is February 21, 2024. Let's focus on the latest dynamics of asset prices. First, let's take a look at the performance of the dollar today, which is basically consolidating sideways. Looking at the US bond market, the yield is on an upward trend, and the results of the 20-year U.S. bond auction announced at 1 p.m. are not ideal, which ends all the long-term U.S. bond auctions in February. In contrast, 10-year and 30-year U.S. bonds show better results. The unsatisfactory results of the 20-year auction form a contrast in the market. There was a surprise at the close of the three major indices today. S&P 500 and Dow Jones unexpectedly turned green, but there was obvious buying intervention from 319 to 320 in the afternoon. It is generally believed that trading behavior in the half hour before the close is wiser, and the activities after the market opens are the opposite. If the market rises at the opening and falls at the end, it usually means that the trend of the day is not good and institutions may be selling. In today's sector, performance, the leading sector in the early stage, performed weakly, while the traditional value sectors generally rose. We saw that the non-essential consumer goods sector rose by 0.7%. Essential consumer goods sector increased by 0.4%. Financial sector rose by 0.3%. And finally, the public utilities sector, the increase reached 1.3%. Next, let's focus on the Fed meeting minutes announced at 2 p.m. next Wednesday, which usually includes observations of the market and views of Fed members. First of all, the market expects the Fed to start shrinking its balance sheet in July, and the slowdown in repo operations is a positive sign. In February, as for the financial environment, although U.S. stocks have recently improved, the Fed team believes that it is still tightening. As for commercial real estate, low transaction volume may mean that prices have not fully reflected potential negative factors. From the perspective of Fed members, the GDP growth rate in the fourth quarter was high, but it may not be as strong as the surface figures because its influencing factors are volatile. Corporate representatives said it was difficult to pass on costs to consumers, which could mean a decrease in demand and weakening pricing power. Also, on the topic of interest rate cuts, the Fed did not discuss it in the minutes, which indicates that the interest rate cut is not yet mature. Special mention of Rivian's financial report. While its revenue slightly exceeded market expectations, its profit fell slightly short of market expectations and lowered its production expectation for this year. One of the reasons is related to economic and geopolitical uncertainty. After the financial report was announced, Rivian announced a 10% layoff to optimize business operations. Finally, speaking of Nvidia's earnings report, data shows that both revenue and earnings exceeded expectations. For the future forecast, the revenue growth expectation for the 2025 fiscal year is significantly higher than market expectations. The fundamentals of the business are heading into unknown territory, and growth uncertainty becomes a potential risk. At this time, it may be a reasonable choice to trust Nvidia's management to control portfolio risk. Remember to leave your likes. Thanks for watching. Look forward to seeing you in the next episode.